Welcome everyone. This is Milan Vaishnav, and I welcome you again to this edition of Market Simplified. It's been long time that I have connected with you all through this series, and beginning again in 2023, I wish to remain regular, and I'll come out with such regular episodes on Market Simplified, where we will explore. Um, the markets, the setup in the markets, any stock specific spotlight, any sector specific spotlight, and so on. In today's episode, I wish to talk about one sector which is showing an exemplary setup, and if the expected levels are taken out, then it may result into a multi-year breakout. Before I move on to that sector, see, it's not a question of any debate that equity markets have stayed quite volatile for most part of the 2022. It had quite number of events to deal with. It had inflation in the US and the Europe and almost everywhere, and it also had fear of recession on the other side to handle. It had geopolitical tensions that the markets had to navigate, the ones that erupted between Russia and Ukraine, and something that is still going on one side. And on the other side, it had a slew of rate hikes from the central bank across the globe. So this has kept the year quite eventful. And going ahead in 2023, I definitely feel that navigating the markets will not be easy. So amid this situation, there were always times when fund managers or investors wanted to stay um, invested in the sector which would either stay resilient or it would be less volatile as compared to the market, so that it would keep at least a portion of their portfolio safe and resilient and relatively outperforming for the majority part of the time against the broader markets. So that being said, I will the kind of sector that I'm spotting a good technical setup is that of Nifty PSE sector, that is public sector enterprises. So public sector enterprises is the sector for under my spotlight today, and we will examine the technical setup on how we should be staying invested in such sector, and what are the technical levels, and what if certain levels are taken out, what could be the potential base effect of that particular development on the charts. So that being said, basically for everyone knows what public sector enterprise is. It's basically a central government owned companies, and most of them are conferred the status of Navratnas. And however, to put it in official terms, central government uh, holds 51% and higher in any such companies is classified under as a PSE. So PSE basically, the Nifty PSE, there is this entire group is represented in Nifty by Nifty PSE index, and Nifty PSE index, it comprises of companies where 51% or higher stake is held by the central government and or state government, either directly or indirectly. So this is what the NSE PSE index is made up of. Now, the let us take a monthly, let's say, glance on the weekly charts first. But however, a look on the higher time frame charts, monthly, that's where the real excitement lies. But let's begin with something on a weekly basis first. Now, we see that after forming the pandemic lows sometime in the March 2020, it found its bottom around 1900 odd levels, and since then until the peak marked somewhere in October 2021, this Nifty PSE index gained almost 130%. So I mean, it rose from 1900, 1950 odd levels from March 2020 lows to the first time that it tested 4400, that was 4504, 4500 in October 2021. So in span of around 17 to 18 odd months, Nifty PSE index gained close to 130, more than 130% in terms of returns. And since October 2021 it's uh, uh, 2020 till date, it has not given any kind of return. And we have seen this index oscillating in a broad range of 3600 to 4400 in the near term. Over the last almost 14 months, last October 2021 until today, we have seen that this level of 4400 has been tested for three times, in fact more than three times, because it's been several times tested in the last quarter of 2022. But if we count it as one instance, then in total since October 2021 until today, the levels of 4400 has been tested three times. And there is no directional call that has been taken by the index. So index PSE index is seen consolidating between this range of 3600 to 4400 since last almost 14 months, and it hasn't gone in either direction. But now that being said, there are other technical piece of evidences which suggest that there are chances that we see a breakout here, and any move above 4500 levels will set the index on a breakout. But this breakout comes with some dose of excitement, which I'll try and visit in the later part. Because let us first examine the couple of technical evidences that are present. First is the relative strength line. I'll just make it bigger so that you can see it properly. This is the relative strength line against broader Nifty 500 index. It's seen rising, and it is also above its 50 period MA. Apart from that, the index lies in the leading quadrant of the RRG. This means that it is set to relatively outperform the broader markets and stay resilient. So this is one aspect where I see that Nifty the PS index is set for a breakout, and more importantly, within this uh, range that it has been trading in, within this range, it is seen forming uh, higher bottoms. And this is a bullish sign, because within an area pattern, if something starts forming a higher bottom, then it's more likely to get resolved on the upside. However, any slippage below the 50 DMA, that is around 4130, any slip below 4130 will keep this PSE index under consolidation. But that being said, it's time that we move to the higher time frame chart where the real excitement lies. This is the monthly chart of Nifty PSE index. And what we saw right now is just this portion. Let me highlight it for a while. What we discussed in the earlier chart was just this portion where we are seeing on a weekly chart. But when we move to the monthly chart and zoom out a bit, it presents a very different story. This index saw its inception in 1995. That's where it started, and it marked its low point near around 250 to 60 odd points. Let me give you the exact idea. It marked its low point between 325 and 330 levels somewhere in September of 2001. And from September 2001 until the first time it tested 4400 levels, it was in December 2000, in early January 2008. So in this span of 6 years, just over 6 years, Nifty PSE index gained a massive 1400% return. It grew 14 times on cumulative basis within span of just over 6 years. Now the interesting part is that from January 2008 until 2023 or end of 2022, this index hasn't given any returns. So we can see this technical setup in two ways. If you would have invested in the pandemic lows, this index in just 14 odd months has returned you 130%. But if you are a long-term investor, and if you have invested this in Nifty PSE, say in 2008, then despite staying invested for over 14 years, almost 15 years, you haven't got anything in return. This index has practically returned nothing in last 14 plus years. So we can see three kind of conclusions here, that Nifty PSE, if you are invested in Nifty PSE during pandemic lows, you have gained 130%. Fair enough. If you have invested for just 6 years from 2001 to 2007, you would have got 1400% returns. But see the magic of technicals, or the magic of the price pattern, or any technical pattern or formation, that for 15 years this practically this index has returned nothing. So what does it mean? That this level of 4400 has been tested several times in last 15 years, almost more than 5 to 6 times, if I can zoom it and count. This is 1, 2, 3, 4, 5, 6, almost 6 times. But index has not been able to move above that. In different words, if 4400, 4500 zone is taken out, this index is likely to give a multi-year massive breakout, which will lead to re-rating of this index. However, there is a caveat that it will have to meaningfully move past 4500. Until and unless this happens, you will continue to see this Nifty PS index consolidating or remaining or oscillating back and forth in a range, and not doing much on the lines of its behavior over the past many months. So this is something that one needs to be very very closely watch. Moving past 4500 plus levels on Nifty PSE index will lead to a multi-year breakout. That is something we need to closely watch out from. Now it's a logical question that how do we track, how do we benefit from this index? So there are basically two kinds of investors that we'll find. Ones are, you can call it, active investors, and there are investors who are just passively following the market. They follow it through ETF, they follow it through index baskets or so. So how do you gain from this Nifty PSE potential breakout setup? And if at all the breakout happens, how you should be tracking it? So in my opinion, there should be two ways to track or to rather benefit from this. Would be to and those ways would be different for active investors and for the passive investors. So let us now first focus on um, the active investors. What we have done here is that we have plotted the constituents of Nifty PSE index on RRG, relative rotation graph, and we have benchmark this against the index itself. So within the index, we'll come to know which components are doing better and which are not. And this is what the picture we get. I've got one annotated chart which I would like to share with you. Is this one? I'll just zoom it. I'll zoom it so that it's clearly visible. Um, this is the chart. This is precisely what we see. We see that all the components that are lying in the improving quadrant and moving towards the leading ones, and the one which are already in the leading one, are likely to continue to relatively outperform within this index. So not all constituents of index will do better. So we have to find out that which constituents are doing better than the others, and also than the index itself. So within this chart answers that which are the stocks that you should be tracking if you are, as an active investor, if you are following the Nifty PSE index. So these are the stocks, and we see that the ones circled in the round, that is PFC, BHEL, RECLTD, are in the leading quadrant, plus the ones circled in the in the blue, which are in the improving quadrant. That is, we have Oil India, we have National Aluminium, Life Insurance Corporation, GAIL, BPCL, Hindalco, Hindustan Petro, are the ones which are likely to improve their relative momentum and join the family of the outperforming stocks. However, the ones that are in the leading quadrant or in the weakening quadrant and rotating downwards, that is in the southwest, may continue to perform individually, but they will lack the relative outperformance. So for any excuse me, for any active investor, the best thing would be one of the best tool would be to stay invested in the stocks that are doing relatively better within the index. You can stay stocks you can stay invested in the stocks the moment they enter the improving quadrant, that is RS momentum crossing above 100, and stay invested in that until it crosses below 100. I mean the RS JDK RS momentum crosses below 100. So in a way, um, you can stay invested in the stock the moment it enters the improving quadrant, and exit the stock the moment it enters the lagging quadrant or the weakening quadrant, whichever happens first. So that way, as an active investor, you will continue to effectively track and stay invested in a relatively stronger stocks with better momentum in the Nifty PSE index. The other way, this is something that a passive investor will not do. So for passive investors, ideally, it is advisable to stay invested in a basket of stocks that are part of the constituent, Nifty constituent, Nifty PSE constituent. Now, this Nifty PSE index, just for everyone's information, is made up of 20 stocks. But if you take the first 10, they make up around 76.3% of the index. The point is that out of 20, if you just remain invested in the 10 stocks in proportion of their weight in the index, you are invested in over 76% of the Nifty PSE index, and that should suffice. So, in a way, there are two ways to track it. Stay invested. For active investors, as I just said, you can stay invested in the stocks that are doing relatively better. They are the ones which are showing strong relative momentum. The method would be to enter the stock once it enters the improving quadrant. Stay invested in it until it crosses into the weakening or the lagging quadrant, depending upon whatever event occurs first. Until that time, you will be able to capture the bulk of the alpha in this thing. Another thing, as I just said, is to stay invested in the basket of stock. This is for the passive investors who can continue to stay invested in the basket of PSE stocks in the proportion of their weight. The top 10 stocks will make up 76% of the index, and that's how you can stay invested in the passive way in the index. Now, the question is that why this pocket is considered resilient and safe. First of all, it has enjoyed a positive to strongly positive correlation with the Nifty. Over the past year, there is a correlation of 0.63, which is considered positive. But for over 5 years, and since inception, if we take it, it is strongly correlated by 0.7 and 0.74 with the Nifty respectively. Now the safety comes from the low beta that this sector enjoys. There is a beta of less than 1 historically for this sector. It has last year it had a beta of 0.71. So in a way, if Nifty lost 1 point, this sector lost just 0.7 point. So, and over the last 5 years and since inception, it had a beta of 0.83. So in a way, beta of less than 1 denotes lesser volatility than the Nifty. So what happens that if you are staying invested in PSE index, the amount of decline would be less as compared to the Nifty. So if Nifty, for example, loses 100 points, this index is not expected to lose more than 70 points. That's how the beta calculates it. And excess a beta of higher than 1 makes it more volatile than the Nifty. But if the beta is less than 1, then it makes this index less volatile than Nifty. So what's the conclusion we can draw from this is that we have to closely watch CNX PSE index moving past 4500 to 4450 to 4550 levels meaningfully. And if this happens, we are in for a major 15-year, multi-year breakout from this massive multi-year base. And that's where you will see the real outperformance coming into this index. Now, just for everyone's information, that if you are interested in reading the text of this spatial technical note, then I would suggest you to visit equityresearch.asia. right? And then scroll down to the latest blog posts, where on the second one you will see the latest note and the special technical articles. You click on that, and you will be able to read the detailed text of this technical note that we have issued to on Nifty PSE index. So that brings me to an end of this edition of Market Simplified. I hope that I'll be able to connect with you all better. If you like this, please don't please subscribe to this channel, and don't hesitate to leave a comment. You can reach me either on LinkedIn or on Twitter, or you can just drop us a line here on just you can just visit the site and drop us a line from the contact us page, and we'll be very happy to revert back to you. So thank you so very much for watching this, and I wish you good luck, and hope to connect with you all soon with yet another episode of Market Simplified. Thank you so much.